I do not want our regular retirement investors banking all of their hopes for retirement on a moonshot that might or might not pay off. Well, good morning. Welcome to Life in the Markets. My name is Tim Russell, and today is Monday, August the 11th, 2025. As we think about what happened over the last week in the markets, it was largely a positive market. There were a lot of things that we were trying to process. I say we, the markets, the actors in the markets were trying to process and understand. There is the jobs report from the prior week is still kind of giving some people some concern. Is our overall economy slowing down? Are we having more potential unemployment? That is still a factor. And yet, in spite of all of that, we had our best return in the S&P 500 and the broad markets here for the last about 6 weeks or so. On the week, the S&P was up about 1.6. We look at the Russell 2000, that was up about 2.7, and the NASDAQ was up a whopping 3.7%. So clearly we're seeing tech leading the way this week. Energy, industrials, healthcare, real estate, these sectors of the market struggled. They actually had a negative week, whereas the rest of the market broadly had a very positive week. Another maybe interesting thing to note is that we looked at the Russell 2000. The Russell 2000 is broadly, it's smaller size companies. You aren't going to find anyone in the S&P 500 also in the Russell 2000. So it's a measurement of a different segment of the American economy, and it measures small to medium-sized companies. And interestingly, those small to medium-sized companies actually had a better return than their larger S&P 500 peers. As we think through, we're getting to the end of earnings season. We still have plenty more results, but most of the results that are coming out now are generally smaller in nature. That's not universally true, but that's generally true. Smaller, less important, but there are still some important ones that we keep an eye on this week, but nothing significant to point at. There's maybe one more thing I want to talk to you about today before we close, and that's something that you may have seen come across the news wires on Thursday. Donald Trump announced that he's instructing the Department of Labor, the Secretary of Labor, to look at the rules governing the allowed investments in 401ks. So a recent headline said this: alternative assets are heading to your 401k. Here's what investors need to know. Well, here's the funny thing. What exactly do we mean by alternative investments? And this is what Donald Trump instructed the Department of Labor to look at. Is it okay for people to, in their 401ks, invest in private equity, private credit, and cryptocurrency? This is not the same as Donald Trump saying, hey, open the floodgates, allow all of this private and cryptocurrency investment categories into your 401k. They're simply saying, hey, can you be a good fiduciary and still allow those into the broader 401k ecosystem? There's a couple things to know. First of all, it's going to take a while for the DOL to do their due diligence to look at this again. They've already looked at it in the past to determine whether or not some form or fashion it could be let in. Let's go down the hypothetical rabbit trail for a moment. If, let's say, it is approved, if the DOL does allow private credit, private equity, and cryptocurrencies in your 401k, is that something that you should get involved in? That's a really, I think, a good question. And the answer, I would argue, is probably not. What I have heard, what I've seen is that the investments that are highly expensive, highly risky, highly just complex in the way that they're put together, oftentimes don't necessarily or automatically work out as well as just a simple basic investment, mutual funds, ETFs, stocks and bonds. I know they're boring, but they work. You understand them. At least they're easier to understand than, say, some private equity opportunity. Now, the difference is you're going to hear pundits, maybe even influencers talk about how you could make a lot of money if you did this or that in your 401k. Get away from those stupid bonds and stocks and mutual funds. Those are for old people. The real smart investors are the ones that get into this kind of thing, the cryptocurrencies and the private equity, private credit. The reality, however, I believe is going to be far different. What I think is going to likely happen, again, this is a hypothetical scenario. If it's approved and allowed in your 401k, likely I think what's going to happen is we're going to have bad actors come into the space and push subpar products onto 401k platforms. I do not want our regular retirement investors banking all of their hopes for retirement on a moonshot that might or might not pay off. Stick to tried and true. There's that tortoise and the hare story. You remember the story? The hare could run really fast but tired out quickly, but the tortoise just plodded on and kept on being faithful and ended up winning the race. While I can't guarantee you a particular outcome, I can with a fair degree of certainty say slow and steady does tend to win the race. Don't try to be fancy. Don't try to be exotic. Just do what works and keep consistent investing, consistent living on less than you earn. You'll be grateful that you did. This week, we've got, again, not a lot coming out with the markets or the news, at least that I can foresee at this point. If there is anything, we'll obviously talk about it next week. So until then, I look forward to seeing you. As we finish up our time today, let me just share with you the verse of the week, and that's from Acts 20:35, and it says this: "It is more blessed to give than receive." We spend a lot of time thinking about how we can build, how we can save, how we can amass more wealth for ourselves. And there is a good in that. But we also do recognize we're not amassing wealth for no reason. We're not saving and investing with no purpose. In fact, we shouldn't simply just be saving and investing with no eye to the present or no eye to the eternal. We should today be looking for opportunities to get God's wealth back into circulation, to bless those who are less fortunate than you, to give and support to kingdom ministries that will do good in this world. Not only that, but we should look for ways to take our investment assets, our savings, and likewise use those to glorify God and to further his kingdom. So, my friends, it is more blessed to give than receive. I'm praying that you experience that joy in your life today. Until next time, take care. God bless. Be safe out there in the markets. Bye-bye.
The topics discussed in this podcast are for general information only and are not intended to provide specific investment advice or recommendations. Investing and investment strategies involve risk, including the potential loss of principal. Past performance is not a guarantee of future results. Securities and advisory services are offered through Genius Wealth Management, member FINRA and SIPC.